Hello and welcome to this Tuesday morning edition of Global News here on NDTV Profit. Thanks very much for tuning in. 7 to 7:30 is when we get to you all the global developments in terms of equity market cues, commodity and the forex fundamentals. First off, the headlines. While weak global signals, Asian stocks are dropping. Overnight equity signals coming in from Wall Street are weak as well. US stocks falling on Monday for a second straight session. European shares closing in the red after China cuts its growth target. The US services sector expands in February at its fastest pace in a year, helped by a gain in new orders and the housing market showing signs of stabilizing, but a decline in new orders for factory goods in the US is clouding the recovery hopes. Oil prices are edging higher as US President Barack Obama and Israeli Prime Minister Benjamin Netanyahu meet to discuss how to confront Iran over its nuclear program, and as China cuts its economic growth target, clouding the demand outlook for oil. And here's where perspective and analysis will come in from this morning. Michael Egaid, Chief Investment Strategist with Pension Partners New York, is going to be joining in shortly from New York. And also we're going to have a little later joining in for a quick check of the commodity markets. We'll have Tom Price, Global Commodity Analyst of UBS Equities Research, joining in as well. So that's what is lined up in the show here on. But let's also tell you what's happening across Asian markets at this point in time. There's a bit of a downtick, as we saw yesterday as well. Across Asia, there's a bit of consolidation that's coming in at this point in time. The Nikkei is edging slightly lower at this point, but it's stuck in a range. Investors are poised to take profits after a more than 10% rally in February. Now, slightly weaker yen this morning and attractive valuations are sort of supporting the market sentiment across Asia. But strategists we've been talking to through the morning here, they've been telling us that the benchmark Nikkei index could today perhaps trade between 9,600 and 9,750. So those are the levels that we're watching out for. But across Asia, domestic investors, they have been selling, and the foreign buying that has so far pushed the market higher, it's taking a break, and that will very soon be visible across the rest of the bourses as well. And you're seeing most of the markets right now looking extremely weak in across Asia. Move over then to US indices, and you'll see that US stocks fell overnight for the second straight session on Monday, led lower by the materials sector after news that China has downgraded its growth target. The Dow Jones Industrial Average has shed about 0.2%, closing at 12,962 by Monday close. The S&P 500 has dropped 0.4%. The Nasdaq dropping just a little under 0.9% at close. Now, Apple stock dragging down that Nasdaq index. Now, the S&P 500 index, it opened lower on Monday on Wall Street, and data showing that the US services sector has expanded in February at its fastest pace in a year. That did little to stem the decline. The Institute of Supply Management has said that its services index rose to 57.3 in February last month from 56.5 in January. It's the sharpest rise that we've seen in almost a year, and it's in sharp contrast to what the economists were expecting. They were expecting a drop to about 56.1. Now, the services sector accounts for about 2/3 of US economic activity, but separate data has showed that the factory orders that are coming in from the Wall Street and US markets, they have actually dropped. 0.1% is the drop that we've seen in factory gauge in the US. So thereby net we're seeing a bit of mixed triggers that are coming in from the economic data front. Move over then to Europe, and you'll see that equity markets there have slipped as well on Monday on growth concerns in the Eurozone. Plus, of course, China weighing on cyclical stocks on Monday. Basic resources stocks were the top draggers. Earlier on Monday, we had also seen data coming in from the Eurozone, which had showed that the Eurozone is unlikely to avoid a recession this year, and that also has a sort of cooled sentiment across Europe. The region's Euro Stoxx 50 has ended off 0.6%, similar sort of cut coming in on the broader FTSE Eurofast 300 index as well. In London, you've seen FTSE 100 dropping about 0.6%, the French CAC is off 0.4%, with the German index, that's the DAX, that has shed a little under 1% on Monday markets. The extended losses in late trade after Greece warned that it is ready to enforce losses on its private sector creditors, with the Greek finance minister coming in and saying that he's actually warned that his country is now ready to activate CACs, that's collective action clauses. Activation of CACs literally means an outright default coming in for Greece. So lots of concerns there as far as the Greek markets go. Let's get some perspective going on what's really happening in the markets, global equity markets across the world, not just in Wall Street. Joining in right now for a quick chat from New York is Michael Egai, Chief Investment Strategist with Pension Partners LLC. Good morning, Michael. Good morning here from India. Thanks very much for joining in. You know, Monday's ISM services data has prompted Goldman to, I guess, come in and raise the outlook for first quarter economic growth to 2% annualized, up from 1.9%. But don't you think that's kind of premature? Because yes, of course, it's hard to argue with economic data, but really, economic data has been mixed.
That's true, but the stock market seems to say actually that growth target may actually be maybe underestimated. Consider that we've had really a substantial rally off of the October low. Equity markets are supposed to be anticipating mechanisms of the future growth state of the economy and of corporations. The fact that the move in equities has been so strong so far actually suggests that growth may be much higher than that in the United States if equity investors are correct. So no, I don't think actually that the idea of looking at past slower economic data is the way to go. The stock market is sensing something more is coming.
So, you know, Michael, I was just sort of going through this ISM data and I was reading up a bit. It says real estate, rental and leasing sectors, they've led growth, which I guess indicates that housing got a boost from the unseasonably warmer weather there.
Yeah, there's some elements of that, but housing in general, we have to keep in mind that for the United States, has been in a bear market since 2005. So it would seem to make sense that given how long that housing has been a drag on the U.S. economy, that you're going to start to see some kind of back and forth, good data, bad data, good data, bad data. But on the whole, things look to be improving. If you look at the way home builder stocks have behaved since the October low of last year, they have substantially outperformed the broader U.S. stock market. That suggests that there is some kind of a growing feeling, some kind of anticipation that housing, which has been a drag on the U.S. economy, may actually now become a strength going forward. Again, markets are forward-looking. The data itself may not be that compelling just yet, but the stock market seems to be saying housing may be a source of strength.
Michael, Friday's official employment report, I guess that is something that will perhaps either solidify or, you know, this recovery trend that we're seeing. But do you see the U.S. payrolls actually rising when the data comes out on Friday?
It's not clear because, you know, as things improve, we have to understand the way that the jobs data comes out. When things are improving, more and more people start to look for work, so you have more entrants into the labor force, more people suddenly looking for jobs. So if you have suddenly this feeling that maybe the economy is getting better, maybe things are improving, and more people as a result start to look for jobs, start to look for work, it may cause the unemployment rate to look elevated even though there's actual improvement within the labor market simply because more people are looking. So it's not clear how Friday's going to come out, but I do think that, you know, saying, you know, from the perspective of a New Yorker, from a perspective of somebody who's here in the U.S., there is a sense that things are improving on the labor front. There is a sense that corporations may begin to hire en masse, you know, once again.
Also, Michael, China has been weighing on sentiment and rather strongly. So this reduction in China's 2012 growth target to an 8-year low. How long do you expect that overshadowing equities in Asia and US? And what's going to be that trigger that will, you know, finally make the markets forget this bit and then move on?
Well, so I think actually when it comes to China, the initial reaction, while negative, in reality may just be a short-term misunderstanding of what this lowered growth target rate is ultimately going to do. Keep in mind, the fear about China all along has been that its economy would go through a hard landing, would go through a period of very sharp contraction. Now, if the Chinese fiscal and monetary authorities are able to smooth that growth rate, manage that economy such that the risk of the hard landing is off the table, that actually is going to be a net positive. That's going to be very bullish in general for global equities. And I think the next step is going to be for China is it will provide some cover for further fiscal and monetary stimulus. When we start hearing in a few months from now that China is lowering reserve ratios, is trying to stimulate consumers to spend, I think when you start to see that wave happen, markets globally are going to breathe a sigh of relief, because really China has been an area which most people have been concerned about. If you remove the event risk of a real hard landing, it actually is going to be a net positive.
But you know, this ISM services data from that came out a little while back, that has been positive. Why hasn't that really helped stem the losses as far as Wall Street goes?
Well, I mean, you know, there's always a disconnect between, you know, what the actual economy does and what Wall Street tries to anticipate going forward. So it's not clear exactly what is causing that. But go ahead. I'm sorry.
Okay. Tom, if I were to look at, where the oil prices are headed, and a quick, brief about commodity, if you track commodity rather closely, we're looking at oil prices jumping high, but do you think that it is really only that geopolitical risk factor which is providing a floor for oil prices?
Yeah, I think there's some of that, but I think it's clear that, given the performance of the emerging economies so far in 2012, it would make sense that, you see prices rise in commodities again. The reason that commodities and equities in general fell off was this fear about Europe no longer being able to be the buyer for all of these goods that are being made overseas. Now, Europe looks like it's going to survive okay, at least for now. If that's the case, if every central bank in the world is printing money to try and prevent a slowdown, then you're going to have expectations for growth coming back to the global stage. That alone should cause a floor to be in place for most commodities, including oil. So as much as oil has the added effect of the risk premium of tensions with Iran or geopolitical issues, the reality is demand, it looks like it's still there for commodities, for industrial production.
And, I was reading somewhere that the UN's IAEA has pointed to serious concerns about possible military sort of dimensions to Tehran's civil activities. But then, don't you think that there's just perhaps too much loose talk about war, because such talk has only benefited the Iranian government by driving up the oil prices, which, of course, they depend on to fund their nuclear program?
Yeah, I'll tell you, I don't think the market believes the rhetoric, and I say that because if you look at stocks which are more defense-oriented, so government contract defense companies, they are not showing a period of outperformance. They are not showing leadership. So in other words, if you're an investor and you really did believe that some kind of imminent military action was going to be in place, presumably you would begin to invest in defense companies in the U.S. Those stocks would begin to outperform. They are not. So the market seems to be saying that this is more talk, more, political grandstanding, and that an actual action may not take place.
Any chance you track gold, Michael? If you do you think that perhaps the precious metal could pull back further if it fails to hold on to some key support levels that last week we had seen? There was a sharp sell-off last week. How are we likely to see the precious metal move up or down from here on?
So in general, I've been writing about this idea that I believe this is a year of reflation, that inflation expectations are rising, and that as a result, anything that's sensitive to inflation expectations will likely do well. Yes, there was a bit of a sell-off in gold. Gold, however, has had a nice move off of the low as this feeling of inflation expectations return. I suspect gold will resume its move higher alongside equities, and that's a very important point. Any kind of a move now in precious metals, I believe, will move step by step with equities, simply as a risk asset play.
Right. Michael, thanks very much for all the time that you've taken out at the end of the day to, speak to us and give us so much more perspective. Thanks indeed. We'll hope to touch base with you once again a little later in the day here. So that's what is happening across commodity markets and the US markets, Wall Street, and we're looking at Asia as well. But let's take a short break here on Global Update. When we come back out of the break, we're going to update you on what else is happening across the world in terms of the corporate action. Stay with us. Staying on here on NDTV Profit, you're with Global Update. We're getting to you a check of what's happening across Asian markets, and what we're seeing is a sea of red out there. This Tuesday morning, we have the Japanese benchmark index Nikkei right now trending downwards. 9,654 is where it is trading at. We've been talking to traders this morning from across Asia, and they are saying that the Nikkei is likely to stay range bound today after the sharp sell-off that we had seen yesterday, the Nikkei dropping to an 8-month low. The rest of Asia looking weak as well. We have the Hang Seng right now trading in the negative territory, sharply more than 1% off on that index. We're also looking at KLSE, the Taiwanese markets across the board sell-off. Chinese markets, let's pull up China. Yesterday, Chinese markets were trading in the positive territory. They closed sharply in the negative territory. There was a lot of sell-off that we saw after China cut its 2012 growth outlook. It's now at an 8-year low. That overhang still visible on the markets there. What's happening in currency markets? We were talking about equities in depth with a lot of expert opinions coming in from Michael Gaid a little while back. But across the forex markets, we're seeing euro this morning rising against the dollar. Euro versus dollar, it's up about 0.1%, and it's now trading at 1.32 to the dollar, up from 1.3197 to the dollar. Now, euro rose after 3 straight days of declines. The dollar index has fallen to 76.309 from 76.428. Traders are sort of lightening up a little of their positions ahead of the outcome of Greece's debt swap. So that's something that the markets, the forex markets, are watching out for. Remember, the Greek finance minister has come in and said that the country is ready to go ahead and activate CACs, which would mean an outright default for the country there. A quick check of commodity markets as well. What's happening in the commodity space? Gold prices first, and we're seeing gold prices are at this point dropping along with equity markets across the world after China has cut its economic growth target. Bullion has dropped 1%, but it has recovered slightly on the back of a somewhat weaker dollar this morning. But investors are, I guess, remaining cautious after last week's sudden 3.5% drop, which briefly sent the metal towards its key technical support level. The US gold futures for April delivery have settled down at about $6 an ounce to $1,703. We're looking at oil prices as well very closely. Oil prices are rising this morning in a sort of tug-of-war kind of trading because on one hand you have risks and tensions over Iran's nuclear program providing support, but on the other hand you have concerns about economic growth in China and the US sort of limiting gains despite all the intensified sanctions that we've seen coming in from the US against Iran, including a European Union ban on importing Iranian oil that is slated to start in July, along with Iran's threats to shut the Strait of Hormuz, shipping, of course, and those are the basically reasons because of which we're seeing that all of this is happening in the commodity markets. What's making news other than the commodity space and the forex markets? Well, President Barack Obama he has said that he met a little while back the Israeli Prime Minister, Mr. Netanyahu, and he has said that the United States will take no option off the table to prevent Iran from acquiring a nuclear weapon. But he has also appealed to Israel for more time to let these sanctions further isolate Iran. President Barack Obama has appealed to Benjamin Netanyahu on Monday to give sanctions time to curb Iran's nuclear ambitions, but the Israeli Prime Minister has offered no sign of backing away from possible military action, saying that his country must be the master of its state, and those are, of course, his words. The two men, they have had a strained relationship. They sought to present a united front on the Iranian nuclear standoff as they held White House talks.
When I say all options are at the table, I mean it. Having said that, I know that both the Prime Minister and I prefer to resolve this diplomatically. We understand the costs of any military.
Americans know that Israel and the United States share common values, that we defend common interests, that we face common enemies. Iran's leaders know that too. You know, for them, you're the great Satan, we're the little Satan. For them, we are you and you are us. And you know something, Mr. President? At least on this last point, I think they're right. We are you and you are us. We're together. So if there's one thing that stands out clearly in the Middle East today, it's that Israel and America stand together.
American International Group, or AIG, is selling part of its stake in AIA Group to raise about $6 billion, which will help the insurer pay part of its government bailout. Markets reacted favorably on Monday, with AIG shares rising to their highest level in 10 months on that news. AIG is looking to sell about 1.7 billion AIA shares at a discount of up to 7% to Friday's AIA closing price. Now, the shares will go to institutional investors, and AIG expects to use the net proceeds to reduce the balance of the U.S. Treasury Department's preferred interest in a special purpose vehicle that holds the AIA shares. As of last month, those preferred interests were worth about $8.4 billion. Russian riot police have detained more than 500 protesters, including Russia's opposition leader Alexei Navalny, on Monday at rallies challenging the legitimacy of Vladimir Putin's victory in the presidential election. Putin, who secured almost 64% of the votes on Sunday, he's portrayed his return to the presidency as a triumph over opponents who were trying to usurp power. About 20,000 people in Moscow's Pushkin Square protested on Monday, calling for new elections. Riot police in helmets, they moved in to disperse several thousand activists. Opposition leaders have said that at least 1,000 people were detained, but the police have put that number to 250 people. Syria's military is pursuing a crackdown on rebels on several fronts, days after eliminating an opposition bastion in the central city of Homs following a 26-day siege. Troops have kept the Red Cross out of the wrecked Homs districts for a fourth straight day, and foreign mediators are continuing to try to end the year-long violence as more civilians flee to nearby Lebanon. U.S. Senator John McCain has said that the United States should lead an international effort to protect key population centers in Syria through airstrikes on President Assad's forces. The United Nations says that more than 7,500 civilians have died in Syria's crackdown on protests against Assad's government. A bit of corporate news flow now. We're looking at Yahoo considering making significant cuts to its staff as Yahoo CEO Scott Thompson overhauls the web portal's business to cope with market share losses. The firings could begin in a few weeks. That's according to news reports coming in this morning. Thompson had said back in January that Yahoo would focus on its strength and prioritize how it uses its capital. The planned firings they were reported earlier by the website All Things Done, which said that the cuts are likely to number in the thousands. Carlos Slim, the telecommunications tycoon who controls Mexico's América Móvil, is the richest person on earth, according to the Bloomberg Billionaires Index, a daily ranking of the world's 20 wealthiest individuals. The 72-year-old man, his net worth is $68.5 billion as of the close of markets on 2nd of March, as U.S. moguls Bill Gates and Warren Buffett placed second and third on that list, compiled by Bloomberg. That's then a wrap of all the top global news and cues this morning. We're going to wrap up this edition of Global News. Thanks very much for watching. Coming up next is Speed News.